first of all, the market is looking relatively tight. Yeah. So when you look on oil prices, you can see the prices are relatively strong. Spot prices are stronger than forward prices, so the market is well in backwardation. So you would assume the market is looking very bullish. But the question is why? Yeah, it's not really bullish or strong because the demand is so strong. Yeah, the market is relatively strong because the supply is managed. So OPEC Plus have been very, very carefully supplying extra barrel, not too many, and that's why the market is looking relatively strong. Demand is not yet the overwhelming driver because we know that COVID is coming and going, and it's not helping really. We still need time, to resolve that issue. So the market overall is supply driven. So OPEC Plus is in the driving seat, and you know what? It's going to be in the driving seat for the next 10 or 20 years because we are now in the age of the national oil companies. Why? Because the international oil companies, they are investing their marginal dollar, not anymore in oil, in additional oil. No, they have to spend the marginal dollar in green technologies, in going in energy transition. And that means really the playground is for the national oil companies. So in theory, when they play it well, they can reap the benefits of it. And right now you could say, yeah, they do that. But of course, as you say, there has been a little bit of a turmoil on the weekend because OPEC Plus couldn't agree on some of their policy. That's the key issue, right? Can they agree on the policy? If yes, and they can manage the market very effectively and keep prices relatively stable and relatively high. The reason why they have not agreed is because it's on the medium term, the reference. Yeah? When they agreed the last time to work together, that was when the market had its meltdown a year ago. And they used the reference of the October 2018 numbers, which was more or less acceptable to everybody. Now, this is something that is not really great number for everyone who has in the meantime invested into additional capacity. So we have right now the UAE that have raised their output. Their reference would be close to 3.2 million, but they're able to produce 3.8. Equally, you could say that Kuwait sees their reference a few 100,000 barrels a day higher than what is their reference. And so the UAE came forward and said, prolonging the current cuts from April next year till the end of next year on the same basis, on the same reference, that's not fair because we have invested so much money. The reason why Saudi Arabia in particular is not very happy to open that discussion is because then everyone else is going to come. And everyone else is going to say, well, I also want to have a different reference. And once you do that, of course, it is the basis for disagreements, and it's going to take some while before they can resolve that. Right. I think the US only gets involved when it affects their bottom line. The prices above $70, or if it were to go higher, would not be seen very positively by the US motorists. And so clearly the guys, when they see on the pump that the prices are rising, people become very angry. They will tell the politicians to do their job. And you can see that nobody wants that. Yeah. So the US administration will try to soften the conflict only for that reason. They don't care about OPEC, OPEC Plus or anything. The only thing they care is about the price on the pump. There are on the background a lot of conversations going on, and we know that OPEC has a tradition of a lot of players that are talking to each other and all that. The reason why this is this time a little bit more complicated is because we have seen in the recent past that the political alliance between Saudi Arabia and the United Arab Emirates is not that strong anymore. As I said, we are in the decade of the national oil companies. If they manage to resolve it, the market's going to stay stable. Nobody wants to see prices to go through the roof because it is only driving anyone to go away from oil and petrol and diesel consumption and into electric vehicles and into energy transition. So it's in nobody's interest. It also promotes US shale, and the forward prices of US shale or the US prices are relatively high. already. So right now, anyone in the US can hedge above $65 for next year, at the end of next year even. And that's not good for OPEC because they're inviting competition. Yeah, consuming countries like India will cry foul because they say, look, we can't afford it. Yeah. So having a price that is $70 sounds good for Saudi Arabia. Having it higher, I think they hurt themselves. And so clearly they have to find a compromise. I think time can tell. I think ideally they resolve it in the next half a year. But if they go for a more dickhead approach and basically try to force it the hand, then prices can easily go to $40. Yeah, because clearly we recall what happened last year. The prices were melting down because Saudi Arabia disagreed with Russia. And they disagreed at a time where demand collapsed. So that means they were not even in control. Nevertheless, they allowed the market to collapse. Right now, they're in control. Yeah? And so that means they can allow the market to go down because they know exactly they can again pull in everyone and agree on new terms. And then they can, when the price goes down to $40, they know they can bring it up again. So in real terms, the oil market is in their control. The question is, are they able to agree on a common policy? Alternatively, the UAE could say, well, we go our way and we are not any longer part of the OPEC plus group and OPEC in particular. That would not be very helpful for OPEC and the national oil companies altogether because it weakens their position and their perception in the market. And that's what I hope will not happen. But of course, that would be also a scenario. The upside is possible if they all go crazy and don't supply the extra barrels. Anything is possible because it's in their control. Do I think this is smart? No, I don't think it's not smart. I think they would not necessarily try to do that on purpose. But maybe they allow prices to go higher, knowing that they eventually let it collapse. So everything is possible from that point of view. I think the price is as good as it can get. $70 is what you can do without harming consumption. Allowing prices to go higher than that is not going to work longer term because it's inviting too much of competition. I actually think it should be $60 than $70, but we know budget requirements, are always higher. So $70 probably on the base case is what they can dream of. If they come to a disagreement and the Saudis want to show that they are the ones who are calling the shots, they clearly can say, we all open the taps, right? And then let's see who has how much capacity. And if they do that, we see the same what happened last year. Everyone is going to pump as much as possible in a short period of time. That will flood the market. And of course, the market is going to be worried. The market will sell. It can go down to $40. I say $40, not 20, because I think that eventually they will then again, everyone will understand, what it means, and then they will try to find a compromise. Yeah.